Welcome to this short lesson on how to short. When I speak to people all over the globe, literally, one of the questions is how is it possible to actually make money in the stock market when the stock or an asset or commodity or currency is going down? So in order to explain that so you can grasp the concept, I basically use an analogy and will guide you through these things step by step. So usually in my live classes, I will use three different people and ask for volunteers. So the first volunteer that I want to have is someone that has a lot of money. So that's very, very easy to find someone to volunteer for that. So let's say we found Jane. So Jane is one of my mastermind participants. She has a lot of money, so she will have $4. That's a lot of money for Jane at the moment. And then I'm looking for another participant, which usually is harder to find. So I'm looking for a volunteer, and let's say we find Joe, and what we are looking for is someone that doesn't have any money and is completely broke. That's usually when people look at me a little bit puzzled, like, yeah, why would I volunteer to be someone that's completely broke? Because I'm here to learn something and I want to make money. So then I rephrase the question and I ask them about, okay, so who wants to be a person that knows how to make money out of nothing? And that's usually when we find participants would say, yeah, well, I think I can do that. So let's say we found Joe here. So that's Joe. And as we can see, Joe has absolutely nothing. So next thing is whoever wanted to have a gold bar, and then we usually find someone, let's say in this case we found Jack, and Jack will get ahead as well, plus he will have a gold bar and a second arm. And now let's have a look in detail how shorting works. So Joe recently went to a seminar and he learned how to short properly and how to make money out of nothing, so to speak. And he has the idea that gold, which is currently at $4, will drop down in price. So as he has nothing, he now has to get a little bit creative and find someone, in this case Jack, and ask him about, hey, Jack, I heard you have a gold bar. Do you do anything with it? I mean, as far as I know, it's only lying around there and you slump over it when you walk around the room. So it doesn't give you any interest or anything. So actually, I mean, it's nice for you to have it, but do you actually do anything with it? And Jack gives it a thought and says like, well, actually, you're right. I'm not doing anything with my gold bar. But I like having it, it's shiny and glittery, so I don't regret it. But yeah, it doesn't give me any interest rate or anything. So yeah, to answer your question, I don't do anything with it, apart from that I just have it. So Joe says, how about this? You borrow me your gold bar, and I will promise to give it back to you, and then you will get some money in advance. And then of course Joe is a very trustworthy guy and he has all the good reputation and a mechanism that will make sure that he cannot grab the gold bar and run away with it. So Jack finally agrees and says, okay, so you get the gold bar. So gold bar here now goes to Joe. And of course we have to eliminate that gold bar here. And Joe, on the other hand, he gives the promise. So he has to give the gold bar back, of course. So he gives us a promise. And he does not only give the gold bar, he also will give Jack some money. So he got the gold bar from Jack. Now the next step, Joe meets Jane and he's like, hey Jane, guess what? How about this shiny gold bar? Look what I got. Very fresh and new, and you always are so yeah, deeply into things of value, and gold is like the real money, it doesn't depreciate. So how about you get this little shiny gold bar from me and you just buy it in the current price, it's pretty cheap for gold, it's just $4. So Jane says, yeah, well, maybe I always wanted to have a gold bar, so why not? So let's exchange gold bars, so you get the money. Money goes over to Joe, and of course we're going to delete this money here. And Joe hands over the gold bar to Jane. So she now has the gold bar, and therefore gold bar goes away from Joe. Now after a while, he sees Jane again, and meanwhile gold dropped from $4 down to $2, and Jane doesn't seem so happy. So Joe approaches her and says, hey Jane, what's the matter? What's with the sour face? You look like something bad happened. She's like, yeah, well Joe, you remember the gold bar you sold me recently? And he's like, yeah, well, I think so. So what's the problem? She's like, yeah, have you looked at the gold price recently? Because it went down. It went down from $4 to $2. And then Joe is like, huh, who would have thought that gold might go in price? You remember, that was his initial trading idea. Now, Jane is not that happy anymore, and he's like, look, if you don't like the gold bar anymore and you're not happy with it, I would be happy to buy it back from you. And Jane is already very excited, and she's like, yeah, great, so I get my $4 back. And Joe's like, well, hold a minute, I would love to give you your $4 back. However, currently, gold has a value of $2, so I can buy any gold bar everywhere for the same price, for the same amount. So I only can give you $2. And Jane kind of swallows the sour pill and says like, yeah, you know, I don't like that gold anymore, so I'd rather get my money back before it drops some further. So they eventually agree, and Joe buys back the gold bar. So therefore, the gold bar here goes back to Joe. And of course he has to pay for it, so that's $2 here that are going away. And Jane, of course, doesn't have the gold bar anymore, so gold bar is now with Joe, and he made $2. The last thing in that equation is, well, you remember we still have a promise here, and Joe is a man of honor, so he goes to Jack and says like, hey Jack, as promised, look, here's your gold bar, so you get your gold bar back. And here it is, Jack gets his gold bar, and of course he has to get some money, because that's the promise. It's not only to give the gold bar back, it's also to give Jack some money for giving the gold bar to Joe so he could trade with it. So here, that's the end of our little shorting story. Now let's examine the situation a little bit. So what do you think? Is Joe happy? Of course he is, because he started with nothing and now he has some money, so he made money out of nothing, so he has a very happy face. How about Jack? Well, Jack didn't really have a risk here because he just had an asset that he already had, and he gave it away for cash flow reasons because he was promised to get a payment and to get his initial investment or the gold bar back. So he's happy as well because he now made money, and yeah, he didn't really have to take a risk, so he made money for what he usually wouldn't have got anything. Now let's consider Jane. Do you think Jane would be happy? Yeah, well, let's not talk about it. She probably learns a lesson here and will become more educated in the future to avoid these kind of mistakes. So this is a little short explanation on how shorting actually works. Now, there's another thing to it, like the practical side, because this is now, people think, oh my God, do I really have to find a jack with a gold bar? And what if it's oil and so forth? Do I have to go to different of these oil incumbent companies and borrow oil from them to sell it to make some money? And the answer is actually no. If you have a look at a normal trading platform, you usually have either a green or a blue button that says buy, and you have a red button that says sell. Now, in a normal scenario, we said earlier, or in another video actually, I said that there are only two ways to make money. One of them is capital gain, and in capital gain we always buy, let's try that again, looks kind of ugly. So in the normal case we buy low and we sell high, so that's called capital gain. And the other way of making money would be cash flow, which is something Jack is doing. So he has an asset. In this case, it's the gold bar. So Jack has an asset and he rents it out and he gets some residual income from it. So in that case, that's cash flow. But Joe here, in our shorting example, makes money on capital gain. Now, in the normal scenario, we would buy first and then we would sell at a higher price. The only thing that changes here is actually that when we short, we first sell at a higher price and then we buy it back when we close the position at a lower price. So we actually do exactly the same, just in a different order. So we first sell, or as I tell it to my people in the mastermind, when you're shorting, you're pushing the red button first and then you buy it back later on. So that's everything that happens here. It's not really complicated. It works very much exactly the same as in having a long position where we buy first and then later on we sell. However, some people have questions about it because it seems to be a bit unfamiliar. First of all, we are selling here something that we actually don't really own. And people have a problem with that because they are like, yeah, I cannot sell something that I don't own. And if you really think about it, you realize that it's not really uncommon. If you go to, let's say, you want to buy a real estate and you go to one of the real estate guys. They don't own the property, they just show it to you and they sell it to you. As long as the seller, the actual owner, is okay with that, that's completely fine. Would it be possible for me to sell your car? Well, of course, as long as you and I agree on it and you're fine with it, I can find a buyer for your car and sell it. Maybe I get some commission on it. So that's absolutely normal. Well, it wouldn't be okay if you don't know about it and I just sell your car and then it's gone the other day, of course. But in our scenario here, everyone is fine with it, so it's absolutely not unusual. It's so usual, actually, that if you think about a supermarket and you go into a supermarket and you buy something, who owns whatever you bought? Well, the first thing, yeah, of course, you own it after you bought it. However, who owned it before? And the answer, which is obvious, would be the supermarket, but that usually is the wrong answer. And the reason for it is that the supermarket pays their suppliers sometimes 180 days or 300 days or whatever, so an incredibly long time later after they put the things in their shelves, which basically means that the producer is still the owner of the product. However, as he is okay with it and he says, okay, you can put these things in your shelves and you sell it for me and then you pay me for whatever you sold and you keep your margin or whatever you put on it, that's absolutely fine. So it's very, very common that we buy things or that things are sold from someone who actually doesn't own it. So we're not doing something extraordinary or suspicious here. It's just a very normal, everyday life thing that we're doing here. However, sometimes you will see people that tell you, okay, you have an unlimited risk of losing money when you're shorting something. And let's think about it. The reason why they say that is, okay, they tell you when you buy a stock, let's say you buy a stock at 100, how far can it go down? And the answer is 0. So you cannot lose more than the money that you invested in it. When it drops down to 0, a company is bankrupt, and even then sometimes the share will have at least some minimum value. However, in theory, you will lose all your money and that's gone. And on the other side, if you short something and you sell something at 100 and the price goes up, then they tell you you have an unlimited amount of risk in losing money. Now, the first thing is that how many stocks do you know that have been trading at infinity yesterday, or the day before, or last week, or last year? So this infinite risk of losing money is just a hypothetical scenario, because actually there's no stock trading at infinity. However, of course, we need to be aware of our risk all of the time, because here losing all of our money, that's something that we never can accept. So we need to make sure that we are aware of our risk and that we actually are capable of stopping our risk. We don't want to drop to 0. We want to get out far earlier because we don't want to risk a lot. I'm very, very risk averse and I don't want to lose a lot of money. Rule number 1, if you want to make money, is don't lose money. So make sure that whenever you risk some money, your risk is under control and it's very, very minimal compared to your upside. And the same thing here. So if we have a limit here where we automatically sell, we certainly will have a limit here. Of course, the limit needs to be now higher than our original buy price, because our risk is on the rising price here rather than on the falling price. But we absolutely need to make sure that we don't risk a lot of money here either, just in case something goes wrong, or we were wrong, or we took a wrong decision or whatever, or maybe all the market and the complete world is crazy and wrong. Who knows? We want to make sure that we don't risk more than we wanted to, and that our risks are also very minimal under all cases. And the last thing that sometimes gets debated is that people claim that you're making money here out of the misery of other people, that actually when the stock price goes down, you're making money, and then while other people lose. Now, if you think about it, that's just my opinion, of course, but what happens here is we are buying and selling. So that's a complete transaction, or as we will call it, a round trip. As we are buying and selling, in my opinion, it doesn't really matter whether we buy first or sell first. It's a part of the game and a part of supply and demand. And in some cases, depending on what company you're looking at, when the management actually is taking some bad decisions, which they probably shouldn't do, maybe they are more interested in increasing their own bonus than doing anything else, then we want to make sure that we are able to kind of punish them. And in terms of salary, they all are participating in the share price. And if you are able to make sure that the share price not only can go up, but also can be brought down if decisions are bad, then I think it's absolutely necessary that we are able to short things. The market will sort it out anyway. So sooner or later, if you're wrong and you sold and the price keeps going up and up and up because the company is doing very well, you have to buy it back and face your losses. So there's actually no harm done. But sometimes people have these things in their mind, or they heard something and they don't really think about it, and then they are telling you, oh, it's such a bad thing to do this or to do that, or you have an infinite amount of risk. You can lose so much money or so much more when you invest it. Actually, if you put a stop in here, you have the same risk than on the other side, and we are fine with this scenario because it looks more familiar to us, and we think this scenario is very, very dangerous. And guess what? The guys that are telling you, hey, you have an infinite amount of risk here, usually are banks or investment funds or whatsoever. And guess what? Who are the people that actually are shorting in the markets? They are part of it, so they are doing it themselves. So if it really is that risky, why would they do it and they tell you not to do it? Well, I hope this little explanation helped you a little bit to understand how shorting works, or how you actually can make money when the market goes down. And yeah, I would love you if you liked it, if you leave me a comment or send me a message. And if you want to learn more, then make sure that you visit our website, www.24hprofits.com. Send us a message on Facebook or send me a message, and we will see that we get you leveled up in your investment decisions and that we make you understand more of it. We got a lot of content for free where you can read our books or our videos and see what else you can learn, what else is great about investing, and how you actually are able to make your money work for you. Because in my opinion, everyone in the world deserves to have the life of their dreams, and that's what I'm committed to. So I want to help you to achieve that. And if you like that little video, give me a thumbs up or like it or whatever. So thank you very much for watching, and I hope I was able to show you how to make money out of nothing, or as we call it, how to properly short in the markets. Thank you.